Hello everyone, welcome back folks. Hope we're all having a good weekend. If I could get a mic check and make sure you guys are seeing the dollar monthly chart. All good, thank you Sigma. Thank you Papa Vlad. Thank you the Quasar Lord. Nabil, 55, all good. All right, thank you very much. So welcome back everyone, hope we're doing well. So no camera today and 1080 quality as I'm streaming from a resort here in Florida, enjoying the weekend with the family, so gonna get this one in however we can. So no camera, a little lesser quality, so the Wi-Fi is all good, so we're gonna be riding dirty. Awesome. All right, hello Sigma, hope you're doing good, brother. Papa Vlad, what's going on? Mahmood, thanks for joining us. Denisha, hope everyone's doing well and ready for the secret sauce. Awesome, glad to have you. Hi everyone, it's the best part of Sunday. Absolutely, thank you very much, my man. Earl, what's going on, brother? Luke, what's up, brother? AB, my man, happy Sunday. Amy, hello, happy Sunday. Hassam, what's going on, my man? Anita, hello, hello. Christopher, let's go. All right, so we got a full house today. So thank you all for joining us. So we're going to go ahead and get right to it. Not going to take too much of your guys' time today. Going to give you guys my analysis, what I'm expecting for this week. Not going to go into the usual detail I go into, as I said, here at a resort. So I'm going to go back to soaking in some rays, swimming in some salt water, and enjoying the rest of my weekend. So let's go ahead and get into it. So just looking at the economic calendar briefly, no news on Monday. So I'm not going to be active Monday. As I said, I'm going to be here enjoying my time, enjoying the last bit of sunshine we have until the winter comes. So with that, not going to be active Monday. No news anyway, so I'm not looking to do a whole lot. Tuesday through Friday, definitely looking for some clean price action. We have a lot of things coming together with the dollar index, bond market, indices, and it's all creating a beautiful tapestry with clean delivery. So I'm looking forward to being all over it with all you guys every step of the way. So that's how I'm going to be looking at this week from the economic calendar, just using that as our guide. So with that, let's go ahead and get into the technicals. Amy Moore, hope you're having a fantastic vacation. I sure am. Thank you very much. All right. So looking at the monthly chart here, always starting from the higher time frame and then working your way down. So we looked at this swing low here after taking the stops and repricing into this inefficiency. And then we're seeing this candle expand higher as we've been expecting since the open. So again, I'm still expecting us to have unfinished business above the buy side liquidity, the 105.883 level. And then through that, my attention goes to this inefficiency. So what I'm going to want to monitor is how we trade above this buy side. If we're going to remain bullish and we're going to see dollar trade to 115, even 120s, I do want to see aggressive expansion through this buy side, and that would be additional confirmation. Longer term, that's what I am looking for, but we do still have quite a bit of time till we get there. So just taking it one step at a time, again, looking for the buy side and continued expansion into this inefficiency. So weekly chart, again, we talked about how the stops were cleaned out, repricing up through these lows, and then offset distribution occurring at the buy side here, here, and then eventually here. So I'm going to continue expecting this weekly chart to continue printing higher highs, going into this liquidity here, here, and then eventually here. So that's what I'm going to be looking at on the weekly chart. Still expecting bullish order flow. We see we have almost 10 up close candles in a row, expecting expansion higher on dollar each week. So bullish breaker here, price found support. So we should not go below this on a weekly chart if we're going to remain bullish. So I'll continue looking for upside expansion on dollar. So daily chart, still continuing that bullish order flow, repricing to the premium levels we were looking for, hitting that rejection block here, which is the highest body. So repricing the targets we were looking at in the previous week. Here we had a daily fair value gap I took our attention to this level in the order block last week, saying that if we were going to continue bullish, we should find support inside the fair value gap and bullish order block. And then what do you know? Body's perfectly respecting that. So that's algorithmic confirmation that this market is bullish. So wicks doing all the damage. And then also understanding the weekly profile we're trading in through the economic calendar. So if the high impact news driver being FOMC is on Wednesday, we're going to expect Monday, Tuesday accumulation, Wednesday manipulation, low of the week, and then we see continued expansion Wednesday, Thursday into Friday, gravitating higher. So again, always being mindful of the economic calendar and understanding how that's going to be trading. So bullish order flow, and then again, this is the high I was showing on the monthly chart that I do want to see us trade to and through aggressively, because again, how we trade there will be a huge factor in determining if we get to these upside levels, which is what I'm expecting longer term, but again, taking it one step at a time. So for my upside targets, after we trade through this high, I'll want to see how we trade there, and then I'll be looking for the buy side here and then here. So that has my attention going into the next coming weeks. So hourly chart, what I'll be looking for is something here like I have annotated. So here we have an intermediate term low. So again, we looked at this dealing range last week from low to high, saying that it would be reasonable to retrade down into a discount, reaccumulate, and then expand higher. That's exactly what the market did. So again, I'll look for that same thing into this coming week. Bit of consolidation, equal lows. So if we're going to trade higher and reprice into the buy side, it would make sense that these lows would want to be taken out. So I'm expecting them to take it lower into the daily fair value gap, clean up that liquidity there, and then reprice it higher to the levels we're looking for. Again, that does not need to happen because we're so close to these highs. It can open and run for it immediately, which would also be fine. So those are the two scenarios I'll be looking for going into this week. But again, still looking for higher prices on the dollar index. So risk off it is. Let's go and take a look at the bond market. And then we'll look at the currency markets after. So again, just on a longer term basis, looking at the monthly chart here for the T-bond market. Again, expanding lower as we're expecting. And I told you guys my attention here is on these equal lows and the remaining portion of this buy side imbalance, sell side inefficiency. So that's what I'm looking for on the monthly chart. So what implications does this have? Obviously for Forex traders, you guys understand there's a direct relationship from the bond market that's directly correlated to the currency market. But as futures traders or people that are monitoring the stock market, what implications does this have on that asset class? So as we see, the bond market is selling off. So what does that mean? Money is leaving the bond market as a flight to quality, which is putting pressure on the stock market. So again, I told you guys last week that the T-bonds typically have a 6-month to 12-month lag time to reflect in the futures market. So as we're seeing here, this market has been cratering, so the bond market selling off is problematic, which is also why we're seeing interest rates spiking. So as we see interest rates continue to spike, that's going to put continued pressure on the stock market because market participants are going to look to take their money outside of the stock market and put that cash to work in a bond as a flight to quality to receive the interest rates and seek that yield that's being derived from the bond market. So again, seeing this aggressive sell-off in the bond market gives me continued confidence to call the stock market lower, but obviously dollar higher, foreign currency lower. So again, it has implications in all asset classes. So again, continuing that bearish order flow here on the monthly chart, drop lower, trades higher for what? Inefficiency. Reprices it, aggressively expands lower. Trades higher to the inefficiency, also mitigation here. Aggressive repricing lower. Same thing here, breaker. Last two up close candles. Extending that through. Body's perfectly respecting it and then aggressively expanding lower. So again, on a monthly chart, we are looking for lower prices on bonds, which is giving me confidence to look for higher dollar and lower foreign currency again. So last week, I took our attention to this low here and said I wanted to see us trade below it, but not just sweep it. I wanted to see it run the low, which means aggressive repricing through it and not looking back, as that's going to give me confidence to continue looking for lower prices. So again, walking this asset down with you guys each step of the way the entire year, repricing lower into the equal lows, external, trading back into internal range liquidity, and then again aggressively repricing lower. And then just looking at that level on the monthly chart I'm looking at, that's that level here. So again, going to continue expecting the market to want to pull down into those levels. So looking at the daily chart, again, bearish order flow. Just taking a look at this last week, I told you guys here we had 2022 model, which was the market, again, taking out that external range liquidity here, pulling back into the range, taking our attention to these premium levels being the bearish order block and fair value gap. Trade up into it, swing high, aggressive displacement lower, market structure shift, fair value gap, mitigation block, market selling off aggressively from there. So going into this week, what I'm going to be looking for is, again, continued downside. Again, I like to see how we displace through that low. That indicates we're going to be seeing continued weakness. So I would look for something like open, manipulation, higher up into this inefficiency, and then aggressive repricing lower. I remain bearish on this market as long as you remain below this up close candle and this breaker here, which is this last down close before the move higher. So if we trade into that, orders mitigated, I would want to see the market reprice aggressively, just confirming institutional sponsorship is behind that move. So that's what I'm going to be looking for in the bond market. Not going to touch on yields as T-bonds are pretty straightforward. All right, so looking at euro, again, same thing as dollar, just the inverse, that swing high, and then seeing that repricing into the sell side. So going to look for continued downside in euro. Weekly chart, 3 drives pattern as we discussed, and then we've been bearish on this market into the sell side. So what I'll be looking for is continued bearishness in euro, looking for these equal lows. But I'll want to see us aggressively expand through this one, and then that'll confirm to me that these are likely next on the agenda. And then through there, longer term, I'll look at this inefficiency here. But again, I'll have to see how we trade at these specific levels. So daily chart, not the cleanest delivery in euro. Again, exactly what we were expecting, which is Monday, market trade higher into this fair value gap, order block, bodies perfectly respecting that, and then repricing lower again. So I would want to see further continued acceleration lower if we are to remain bearish. So now looking at the pound, I wanted to cover pound. So I told you guys last week that for the currency traders, you would have more bang for your buck trading the pound lower. Reason being, one is the euro pound, the exotic cross, was indicating that it was bullish. So that means we're going to see more pressure on pound. But another thing I used was the six sister. So because euro already priced in the low and has already booked that, the pound's going to look to catch up and reprice to it. That in conjunction with bullish euro pound makes pound dollar shorts a slam dunk over euro. So again, I like how we repriced through that low. So what I'll be looking for going into this week is expansion lower into this inefficiency here in purple. And then I will want to see how we trade there. If we get a closure below it and then potentially use that as resistance, I'll be interested to see then the market accelerate lower for the sell side here. So daily chart, bearish going into this week. So we see Monday, accumulation, Tuesday, manipulation, high of the week, and then each day does what? Exactly what we were looking for, which is aggressive expansion lower through this sell side. So again, compare the price action on the daily chart from pound to the euro. So this is why it's always important to understand which asset class is the one you want to be trading. Yes, they were both bearish, but one delivered much more cleanly and precisely than the other one. So always important to take notes and be conscious of the details that I'm sharing in here, as they are extremely important. So daily chart for pound, we have a fair value gap here above market price. So it would be reasonable to expect the market to retrace into that. And then how we trade there will be influential. We do not need to reprice into this inefficiency, but that's personally what I'm favoring. But on the downside, my 3 targets would be this inefficiency in here. And then again, how we trade there, I'll want to see expansion through it. And then I'll look for this sell side in here. So that's what I'm looking for in pound. Let's go and take a look at ES. Hassam, why is the institutional order flow entry drill on down? Yeah, so we qualified this here real time. I told you guys it's an institutional order flow entry drill before this week opened. Reason being is because there's a fair value gap. But look at what's on the other side of that fair value gap. Inversion fair value gap. So when two fair value gaps overlap, that's what's going to create your institutional order flow entry drill. So if there's, again, fair value gap, PD array on the other side of the curve, that's where your institutional order flow entry drill is going to occur. Dropping the sauce here on this one. So if you're not paying attention, definitely missing out. All right, so looking at S&P here, monthly chart. So monthly chart here for S&P, expanding lower. So again, I'm going to look for the rest of this inefficiency here to be repriced, what's left, and then going to expect this monthly candle to continue expanding lower. Then what I'll look for as a target beyond this fair value gap will be this down close candle right here, which would be our bullish order block. So again, looking for downside to continue on the stock market. NASDAQ seeing that same thing, bit cleaner inefficiency in here. So what I'll be looking for is continued expansion lower. I want to see aggressive repricing through previous month's low. And then through that, my attention on the NASDAQ is inside of this fair value gap in here. So on a monthly chart, that's what I'll be looking for on the NQ. So again, I'll take some questions here after I finish up with the analysis. Then I'm going to go ahead and get on with the day. All right, so weekly chart for S&P. Let's go ahead and put the annotations on. So last week, I took our attention to this fair value gap, showed how we traded into it, did not even trade to 50%, and then aggressively repriced lower. So on last week's live stream, I shared to you guys that my attention was here at the sell side and then this inefficiency. So again, repricing through the sell side and falling just short of this inefficiency. And then obviously I expect that to be delivered into this coming week. And then how we trade there inside of this fair value gap will be influential. Reason being is because if we close below this fair value gap and volume imbalance, then I'm going to take my attention to this inefficiency here and then even these equal lows. Basing what I'm seeing off the bond market, off dollar, we definitely have much more downside to come in the S&P. So as I told you guys last week, I'm still expecting the stock market to continue cratering. And this is also as a result of a lot of events we have going on around the world, a lot of geopolitical things, a lot of things I can't even talk about on YouTube. But for those of you guys that know, you know. So definitely be cautious in the stock market because I'm definitely expecting it to continue aggressively repricing lower. So on the NASDAQ, so I took our attention to this weekly bearish order block, seeing how we repriced into there, swing high, and then expansion lower. So again, what I'm going to look for in the NQ or the NASDAQ will be this swing low here. And then how we trade there will be influential, but I am expecting us to get down into this weekly fair value gap. So daily chart here for the S&P. So broke down lower through the sell side as we were looking for on this expansion. And then we retraced higher into a short-term premium, just measuring the dealing range from high to low. I wanted to see how we traded in premium valuation. Would the market be able to sustain it and continue repricing higher? Or would it reject lower? And then we see here, swing high, pulling back aggressively, leaving that premium valuation. So this confirmed to me that this market was bearish, and we've been calling lower prices since. Again, seeing how this fair value gap traded up into that, bodies respecting it perfectly, and then repricing lower. So because this daily fair value gap, as I believe I covered on the live stream on Thursday, balanced price range, delivers both sides and then leaves it. So that's why we see this market trade up into it, use it as resistance, and then aggressively seek the equal lows. So another thing I wanted to touch on here is how to identify high probability trading days. High probability trading days, in my opinion, are days where it's almost impossible to justify the other side. You know where that daily candle, 4-hour, 1-hour candles, that those are all in concert. Dollar is bullish. Everything is firing on all cylinders. When all those things come into alignment, that's how you have high probability trading days. So looking at this candle expansion here, what day was this? This was Thursday. This is the day I sat down with you guys and did a live stream. Why am I able to be so accurate and call 1 minute candles, 5 minute candles, play by play, telling you exactly where it's going, where it shouldn't go, and it delivers to script exactly as it's coded to do? Because I'm putting myself in front of the charts when it's overwhelmingly one-sided and obvious. If I was to get in here and trade, for example, and live stream in front of you guys in these types of conditions, where it's scalping and it's not as higher probability, my results would look like every other live streamer's results. But because I know exactly what I'm looking for, I know how to put myself in front of one-sided, clean markets, my results speak for themselves. So again, for your guys' trading, you want to focus on these types of days. This day, it's almost a slam dunk to expect the market to reprice into these inefficiencies. So how do you develop daily bias? Daily bias isn't everyday bias. It's understanding when the market is one-sided, when it's obvious, and then that's when we're trained to execute and attack and look for our opportunities. So you got to be patient. You got to wait for these clean setups, and that's how you trade high probability in these markets. So again, going into this week, extreme weakness, we see this fair value gap in here that we left open. So I'm looking at that as a breakaway fair value gap. So again, don't want to see this one fill in. And then I prefer to see this entire inefficiency not filled in. So this one here, I'd rather see us trade into it and then leave some open. Because if we leave some of this inefficiency open, that'll confirm to me that this market is extremely weak and that I can continue trusting my sell models in the S&P. So for targets on the week, I'll be looking at this sell side here, which is at the 43.52.5. And then through that, I'll be looking at this inefficiency, which is this one-sided delivery higher. And then I'll look for that to be repriced as my second target. How we trade there will be influential. And then through that, my last target would be this swing low here at the 42.58. If this market does get aggressive and start accelerating on the downside, then again, we have this lower inefficiency in here that I will be looking for. And again, I am extremely bearish on this market. So another thing I wanted to acknowledge, trader capital, how you level up, that's how you break free. Skills here